Hello everyone, it's Simon here from fundedtradingplus.com here, and I've got a fantastic trader interview with Eva, who is a trader out of New York. She's just passed one of our valuation tests. We're about to give her live funded trading account. I thought it'd be interesting for you to hear what makes her successful, what sort of strategies she trades, what sort of markets she trades, and so on and so forth. Really interesting interview here. Unfortunately, I made a slight error with my local recording, so when I'm talking, you'll see a picture of me. See if you can spot the slight difference. Eva, hello. How are you doing?
I'm doing wonderful. How are you, Simon?
I'm great. Thank you for doing this interview. How's New York at the moment?
It's great. It's very cold. It's a little snowy, and we're supposed to get between 8 and 12 inches of snow this weekend and a nor'easter, so I'm staying
Really? I don't
inside.
mind proper snow. It's the rubbish snow that we have in the UK that's not particularly good. So the reason I'm talking to you today is firstly, congratulations, because you have passed our evaluation stage of our funded trading account, and we're about to put you on your live account. And I just wanted to do a trader interview with you and ask you some questions and just get a bit more sort of information, insight into what makes you tick as a trader, why you chose us, and what your plans are, what you trade. We'll have a look at your dashboard and things like that as well that you've used to pass, and just go from there, really.
Great.
I mean, so why did you pick us just initially out of interest? Because there are a lot of people out there. Very briefly, don't need to talk for ages about this point. We'll get on to the more interesting stuff.
Well, I really like your rules. They're very simple. It's just two rules about drawdown, and that's it. I tried One Up Trader Evaluations, and they have so many rules. The trailing drawdown was very difficult, to deal with. And you have to trade every day for like 15 days. I'm busy trading my own accounts, and to do the evaluation while I'm trading my own accounts, that time pressure was really a lot for me. So I liked that there was no time pressure, and that you didn't have that trailing drawdown after you get above that certain price level. So
Yeah, I mean, I think from my point of view as a trader, and obviously wearing my trader and business hat at the same time, I went through a lot of the American futures firms, and they have a lot of, to be blunt about it, they have a lot of rules to trip you up. I did all the big American futures ones, and that's why we decided to do a CFD based one instead, rather than one which CFD might be an alien concept to American viewers because they were unfortunately banned in 2010. But because you're trading our account, it's perfectly possible to do so. So yeah, I mean, I think from a trader's point of view, those rules were the things that I didn't like. The trailing drawdown squeezing you. If you trade too large a size on a contract, you instantly get booted off the system. A lot of the American futures ones you can't hold overnight as well. So it forces you to be a day trader, which may not suit you, because we've all been in those trades that you may think is a day trade, and then all of a sudden it turns into a bit more of a swing trade, doesn't it? And that's what those limitations were the things that we weren't interested in. Tell me a little bit more about you anyway, and your background, how you got into trading and things like that, and what's got you to where you are today.
Well, I'm a lawyer. I'm not practicing. I haven't been practicing since 2016, but I was practicing law. I've practiced law for 19 years in New York before I retired. And I just learned, I wanted to learn how to read a chart. I had bought and sold stocks, in the past before I came across trading, interest rate trading or day trading. So I want to learn how to read a chart. I went to a school, learned how to read the chart, realized, and I was really doing it to manage my IRA, my wealth accounts, my retirement accounts. But once I did that, I learned about Forex and futures, and I really fell in love with trading. So I was trying to trade at the same time as practicing law full time. And it was really it was just frustrating. I mean, I was getting up at 3 o'clock in the morning to trade Forex, but the market was moving so well in the indices when I was in a deposition or in court, and it was just very frustrating watching the market make all these great moves and I can't get in on it. So it was, and I came to love trading more than I love practicing law. I love both, really. I love the law, but it was time to just give trading a shot after I really proved that I was consistent over a period of time. So that's what I did. And I'm been,
Yeah, I understand. I mean, I was involved in criminal law for some time as well, and I know what it's like when you're so busy with various things, and you just want to get stuck into trading. I mean, I work shifts, so it was a little bit easier at times, but yeah, sometimes a job can really get in the way, particularly when it's as demanding as you know, practicing law in that respect. It can be very demanding, and after you've had a long day, been tired, it's probably not the best time to trade. But yeah, it's interesting. So a lot of people do ask those questions about how they transition from one career into trading, and sometimes you can sort of merge in a part-time way like I did, and sometimes you sort of almost have to just take the leap like it sounds you have, but at the same time you also always have those skills as, I guess, as a backup in that respect, don't you? So yeah, it's an interesting career path. Do you think there's any sort of skills in that background that help you be a trader?
I don't know. I think that just being able to plan, you have to plan a strategy when you're, evaluating a case and taking a case through discovery and trial. Just that kind of strategy planning, I think, carries over in a broad sense into trading, really. I think that's
Yeah, I guess you get those sort of critical thinking skills as well, don't you? When
right.
you're very good when it comes to law, I guess you're very good at separating fact from speculation, and what's useful information, what's not useful information. In that respect, in trading, you have to be very ruthless in that respect, don't you? And that sort of
Yeah.
leads me on nicely to sort of, what type of trader are you? Sort of short term, long term, swing trade. What instruments do you trade? I know what instrument you trade, but having looked at your profile, but yeah, the same one I love as well. So yeah, tell me a bit more about that.
Yeah. So, and another thing with law is you have to be really big on risk management. Risk management. You have to be a risk manager in law and as well as in trading. So I'm mostly an intraday trader. I started off when I was doing both practicing law and trading. I was doing more overnight swing trades, but also doing some day trading in the morning from 3 a.m. to 6:30 a.m. So, but I'm mostly an intraday trader. I will have some swing trades in stocks and forex, but mostly intraday. And I focus on the Nasdaq, the euro dollar, and the pound dollar. Those are my three markets that I really like the most.
Okay, yeah, that makes sense. I mean, I love the Nasdaq. I think it's a fantastic index. I mean, I've only traded it past year. I was traded the Dow and S&P, but the Nasdaq is a beast. But you can get on the wrong side of it very easily, as I'm sure you know. And then I think just
Yeah.
focusing on a couple of main currency pairs is probably the best thing. Just having three things that aren't necessarily correlated gives you a bit of that flexibility. Because some people, they just trade so many different markets, and they just end up over trading. So it's almost like, jack of all trades and master of none, isn't it? You don't practice multiple areas of law. You just sort of specialize and get very, very competent at one. Would you think that's your sort of approach?
Yes. Yes, definitely. That's very true. And that's been my approach, just to focus.
What have you noticed then? What's interesting for me is like I say, a lot of Americans are discovering contracts for difference rather than a future. It's a futures with a contract with an exchange. CFDs a contract with a broker, and unfortunately, like I said, the US saw fit to ban them in 2010 because of all the derivatives carnage that caused the subprime mortgage crisis. For some reason, the CFDs got banned. The cynic in me would say the exchanges didn't like CFDs because it takes away their commissions, which leads me into a nice point about what have you found different with CFDs versus futures, if anything at all?
Well, I'm still adjusting to CFDs, to be quite honest with you, because they are so foreign to us as Americans. But I like that I just have to deal with the spread. I'm not worrying about, the commission, especially if I'm scalping and looking to protect. When you're doing that and, putting on a lot of trades, those commissions can rack up. But if you're doing the CFDs, it's a little bit easier to manage.
Yeah, I think the commissions is definitely one aspect because it's like you don't know what your total is in today, and what you find with a lot of funded trading firms, again from my personal experience, is they rack up the commissions. Like the NQ or the MNQ, should I say, the micro Nasdaq should be on a Ninja Trader lifetime license is 51 or 50 cents a turn,
Right.
whereas when you get with some of these firms, it charge you 83 cents, and it just chips away at your edge, doesn't it? I remember going through one, and I was trading pretty much the micro Nasdaq, and I'd made $1,000 profit trading quite carefully, small position sizing, but I paid 1,600 in commissions. 600 in commissions, and it just eats away at your edge. And I think the second thing that a lot of people find with CFDs they like is the fact that you have one contract to take care of all your position sizing. You don't need to go from the MNQ to the NQ in the futures market. You don't have to, like, when you between the gaps of those two markets as well. I think people like that as well. And also it's a spot price, not the futures price, so you can consider the cash price. You can consider future historical support and resistance. You don't have quarterly expiries and things like that. So I'm the other way around. I started off on CFDs, and then I discovered the futures, and they've both got the pros and cons, but I think overall a CFD is a superior sort of derivative.
I think they are.
I've
I've enjoyed trading them during this evaluation. I think there's,
Yeah.
it's a better way to trade. It's too bad we don't have them here.
They are, yeah, it is a shame. It's a shame they were banned, but like I said, I think it was taken away from the commissions of the exchanges, who I expect have got very powerful lobbyists, without delving into any politics or anything like that. If you are finding this content useful and you're interested in joining a funded trading community, then our Discord link is in the description. We'd love to see you come and join our group. Anyway, so what was, I think we pretty much covered why you originally started trading, but what's your sort of future goals with trading?
I look to improve any way I can every day, and just eventually just build up my accounts, build up more in my wealth accounts, and just on that trajectory, really handle larger accounts eventually. That's just basically it. I just look to improve every day and build up my accounts.
Yeah, I think it's sort of that entrepreneurial, autonomous spirit. I think you sort of embody there. It's like some people, they need that sort of traditional corporate structure where they've been told what to do. They have a safe paycheck and stuff like that. Other people value the freedom of the market, because I think it's scary for a lot of people, because your performance is a direct reflection of your development. There's no BS. There's no glass ceiling. There's no nepotism. There's no politics involved. It's just, there's almost a purity, isn't it? And if you are the sort of person who's got that personality that embraces that, then the potential's unlimited. And like you say, if you've got that, you say about improving every day, that continuous improvement, like that road to mastery, as trading psychologists would call it. I think that sums up the sort of things that traits or personalities that I do see in successful traders, is they have that appetite to get up and just be that little bit better every day. And if there's setbacks, you treat them as a learning experience without sounding too cliched. And
Exactly.
you certainly sound like you have that approach, if you like. I mean, to take the fact that you've gone from what I imagine was quite a well-paid legal job, quite relatively safe, and there's obviously progression there, to move into trading again is probably quite representative of that.
Yeah, exactly. That's my attitude. Exactly. That's my approach.
Okay, two relatively quick questions then. What's your biggest trading success?
I think that in terms of trading, what I value as a success is consistent improvement, and just consistently being able to make income, take profit out of the market every day. Like that might sound a little cliche, but that's really important, and I value that in myself. I've had some big days. I can't say that I've had. I had a friend who was trading the British pound short when Brexit happened, and made $150,000 on
Nice.
like 10 standards.
Once in a lifetime.
Yeah, so I can't say I've had a day like that, but I've had some like 5% days, and that always makes myself feel good, and just being able to execute and improve my execution every day. That's something that I value.
Yeah, so it's more the sort of the overall process of trading that obviously leads to the outcome, because a lot of people are so outcome focused. I'll get on a daily basis, how many pips, how many points do you make a day, and it's like no. The only goal of the day is to do your process as well as possible, and your outcomes are a byproduct. But
Exactly.
so yeah, very, very tricky about sort of getting anywhere near the psychology of it. Opposite question: what is the worst experience you've had with trading?
And the worst experience was the day that the Swiss National Bank pulled the peg to the euro.
Oh, yeah.
Because I was pretty new. I was a very new trader, and I was up at 3 o'clock in the morning trading, and I was long the dollar Swiss, and it just happened. And I watched it, and the screen froze, and trading was halted, and I was like, "What's going on?" A very new trader, not really understanding. And then I realized after that. And then, so when the market opened, I ended up losing in that like $4,500. So that was quite a lot of money as a new trader to just lose in a black swan event, really. I mean, it wasn't expected. And I recalled the Swiss National Bank saying maybe a few days or a week earlier that they were going to maintain their peg to the euro. And then it was like they went rogue and just turned around and just pulled it without any warning, without telling anybody. And so that was just a shock. That was a little bit of a shock for me.
It was a shock to everyone. I mean, unfortunately, that's not a pair I trade. I mean, you are right. It's a black swan event. I mean, there's quite a few implications of that. I mean, I will show that on screen once I edit this, and people will be able to see that right now. This is what I'm talking about. This is what happened to the market. You can see that candlestick there when what happened, and the consequence of that is there was no liquidity in the market. People weren't able to get out positions. IG, one of the biggest retail brokers in the world, FTSE 250 broker, lost $36 million, I believe. There were people who these brokers were chasing who, because they were trading at leverage and the stop losses weren't honoured, owed more money than they had. The houses were at risk and things like that because they were over leveraged. It was one of the things that drove the leverage changes across Europe with ESMA to limit the leverage on CFDs because people were far too exposed with it. Brokers went out of business. Alpari went out of business, or the UK branch did. So it
Wow.
was an absolutely massive catastrophic event, both on a retail and institutional level as well. So that was definitely getting in the deep end. But at the same time, it shows you what can happen when you're playing, this Russian roulette. Now you might have 1,000 chambers, but eventually it might ping you off, and that was definitely one. That was a really unusual event, and to get on the wrong side of, but
Yeah,
a powerful learning experience to sort of put a
very much
positive spin
so.
on it as well.
Very much
Um,
so. And it didn't wipe out my account, but it maimed it. And then it forced me to do more, risk management, just, build it up, build it up, build it up, back up. Little
Yeah, I mean,
basics to build
it
it up.
shows you had the risk management in the play in the first place. Yes, it hammered your account, but
Right.
you weren't end up owing the broker. So it just, I guess, your risk management was there because you were able to stay in the game despite a very unusual, catastrophic event and still survive. So I guess that's the positive sort of to look at it, wasn't it? And then just finesse your risk management even more after that as well.
Yes, definitely.
What sort of strategies do you use then? Because I think people are very interested in trading strategies. You don't have to give away your secret sauce, but just sort of a general sort of overview.
I trade with the trend generally, with pullbacks to supply or demand, with also an eye on the higher time frames when I'm coming up to higher time frame supply and demand that I don't, that I might use as a target, or I don't want to, I don't want to go long in higher time frame supply. I don't want to go short and higher time frame demand or get tripped up that way. But I do try to stay with the trend. When I'm intraday trading, I'll trade with the trend or with the momentum of the day, whichever one seems to be carrying. But I look to certain inflection points that where I might expect a reversal, and then I might trade that reversal. But in general, I really like to trade with the trend and just pullbacks to join that trend.
Yeah, the trend is your friend. I mean, I think looking at your trades, you were very Nasdaq heavy, weren't you? And the Nasdaq,
Yes.
once it moves and it trends, it's like a bit of a monster, isn't it? I mean, this month is, January 2022 has been very difficult. So, I mean, I've found it difficult, and I trade indices. I've been trading indices for a long time, and you've certainly outperformed me in that respect. So,
It's been very
how do you
tricky.
define? How do you define momentum? What do you sort of look at to define? Is it just a case of the candlesticks maybe making higher highs, higher lows, or?
The speed that it's trading, candlesticks making higher highs, higher lows, yes, definitely, but also the speed that it's running with. I also take a fundamental look at what's driving the market. Is money driving into the FANG stocks? What's the dollar doing? What are bonds doing? What's gold doing? So I have that all in the back of my mind. And I think that trading currencies is an edge for that, to understand the fundamentals of where money's flowing, and where the momentum might be going. So when I'm trading the dollar or the euro dollar and the pound dollar, I'm looking at the US dollar and I'm getting an understanding from that. And then I can get a feel for the day, like, all right, is this going to be an update, or are we like completely selling off today? You kind of get whether it's a risk on day or a risk off day. So that factors into it too.
Yeah, absolutely. So there's almost a bit, I guess, a bit of intuition, isn't there, and a feel for it if you're saying you're judging the speed as opposed to using indicators in that respect, like an ADX or something that may indicate momentum. People have got different methodologies. I'm similar to you. I just prefer the pure price action and sort of just, if we believe technical trading works where there's repetitive patterns in the market, then we should believe intuition works, which is just pattern recognition on a subconscious level. You almost get a feeling, don't you? Like
Yes.
something, this is going to happen. You don't necessarily know why. But as long as you manage your risk, I guess you can take those discretionary trades.
Yes. Yep.
How do you identify reversal points and inflection points? Is it support and resistance, or is it when you sense the momentum's coming out of the market?
It's support and resistance and supply and demand, really, and prior highs and lows. There's some intraday points I'll look at, like where VWAP is, the initial balance, where the initial balance is, and if we're staying above it, below it, or just chopping around inside of it. Um, so those, and the opening price also, previous day's high and low. Those are the things that the inflection points that I look at from an intraday basis.
Okay, yeah, that makes sense. So sort of corroborates with some support and resistance as well, doesn't it? Yeah, yeah,
Yes.
that makes sense. I guess you can also use that to sort of put stops and profit targets in place and other things like that. Do you use a trade log or anything like that? Journal?
I do use a trade journal, but and I used it more when I was first starting out. I would journal everything, but now with the scalping, I don't really do the journaling on the scalping. But my larger trades or my more important trades or a trade that I could learn a lesson from that is an intraday trade, then I will journal it and take screenshots. The journal is very helpful. You can learn a lot from journaling. So,
It is. It is. Absolutely. Yeah. I mean, yeah, you're not going to record every scalping trade, or it just drives you insane, doesn't it?
right.
You don't need to. You can just do a sort of summary of the day if you like, and do a screenshot and have your arrows or whatever marking on MT4 or 5, whichever one you're using. But yeah, I mean, journaling's one of the things that so much of trading's out of our control. We don't control where the market's going. But I always say to people, look, journals are something that you're in control. Why would you not do something that's completely in your control that you can use to improve? And the answer is because people are lazy.
Right.
But
That's it. That's the
people are
answer.
lazy and they just want to enjoy the sort of fun side of trading, which is the indicators, the action getting in. But the people who succeed are the people who put the time and effort into the less fun side, if you like.
Right.
And we've got to put the groundwork in because trading is a complex skill and people don't treat it as it is. It's like, to use a law analogy, would be perfect. It's like just starting out of law school and then going thinking you can present in the Supreme Court. It doesn't work like that. You've got to work your way up, and trading's exactly the same. And people treat it very, very differently.
Definitely. And trading is so much pattern recognition. If you keep a journal and you review it and you're diligent with that, you'll see patterns within yourself that can
Absolutely,
create
yeah,
an edge.
absolutely,
Yeah.
absolutely, yeah, absolutely. You'll see patterns in your own behaviour. I mean, so many times I've had traders who what's your best market? The DAX, the German stock market. Okay, what's your best strategy? This one. Do some analysis. Turns out DAX is a losing strategy. So our
Right.
subjective sort of opinion or memories of what we think we're good at can be completely different to what the objective data say. And it's like, well,
Absolutely.
let's stop trading the DAX then, or let's review the DAX. And it's like, oh, more profitable. So yeah, putting that work in. Professionals do.
Yeah.
You're competing against people in institutions. We've worked with Steve Ward, who works with institutions, professional trading psychologist, and they do journal. They put this work in, so we have to do it as well in order to compete with them as well. Can you describe a
Absolutely.
typical day then?
Typical day, I wake up, I try to wake up for London, like at 3 a.m. Um,
Wow.
lately I've had some insomnia, so I've been getting up at 4 or 5, but I try to trade as much of London as I can because the currencies trade better during London typically, and
Yeah.
sometimes the indices also trade better, more smoothly during London
Okay,
than
that's
during the
interesting.
New York session. So I'll start trading mostly euro dollar and pound dollar, and I'll keep an eye on the Nasdaq, keep an eye on other things. Maybe some other currencies, if they're moving, I'll take a look at them, but mostly focusing on the euro dollar and the pound dollar. And then when New York comes on, I'll start focusing more on the Nasdaq and just let my trades on the euro dollar and the pound dollar either keep going. If I'm still in a trade, I'll keep managing it, but more focusing on the Nasdaq. So
Okay, yeah, that's interesting. That's interesting. That's an early shift. Yeah, I mean, I'm obviously you're Eastern, obviously, so I'm 5 hours ahead. So for me, the New York opens at 2:30 our time, which is perfect. 'Cause I hate mornings. So you got to find what works for you, haven't you? I mean, I don't get up for the London Open; it's far too early for me. I prefer you guys who do a shorter trading day than we do. Don't know why we need to do 8 till 4, but anyway, what advice would you give to an aspiring new trader?
I would say focus on your risk management and know where you're wrong. It's very important to know where you're wrong in a trade. And if you can get in as close as you can to where you're wrong, you're minimizing your risk. You're also expanding your reward. Um, I would say absolutely keep a journal and get to know yourself as a trader as it is, not how you imagine yourself to be in your head. Um, and I think that's, yeah.
Yeah, no, absolutely, no. It doesn't need don't need to reinvent the wheel with the advice, do you? In that respect, it's the same sort of stuff. We all know what trading errors people make: two big losses, two small wins, and then they end up blowing up. Revenge trading, all the usual things. But yeah, I agree. Certainly, trading log, I think, is the pertinent point that's come from this. So, what would you give top 3 tips for passing a funded trading test then?
Definitely keep your losses small. You've got to keep your losses small. You can't have a big loss. You can't let something get away with you hoping it's going to come back. Just take the small loss and just make sure that your winners are larger than your losers, or at least try to, excluding the scratch trades, of course. Um, and just keep your position size small in the beginning. And then once you're seeing, you're doing better, you're getting into that rhythm and you're building up somewhat of a profit margin, then you can start slowly increasing size and do that.
Yeah,
I think
yeah,
that's the best way to go.
yeah, absolutely. No, I totally agree with that. In respect. All right. Well, in conclusion, then, it's great to have you on board with the trading team. We'll get you all set up on your live account,
Thank
and
you.
yeah, it's fantastic to interview you. Thank you for taking the time.
Thank you. Thank you. It's a pleasure to trade for you guys. And I'm going to enjoy it. This is going to be great.
Excellent. Thank you.
Thanks.
So thanks for watching, everyone. There's going to be lots more trader content and funded trading content on this channel. So please do subscribe and have a watch of some of these videos as well.